Capital markets in the EBRD region are very different, and therefore they've been diversely affected by the current crisis. For many of the smaller countries, they did not focus on building up the domestic capital market, especially where they thought they were imminently going to join the euro. But for the larger countries like Poland or Hungary that are part of the Eurozone, it has been refocusing on the domestic capital markets and on the currency, partly because it's very difficult for their companies to refinance in international capital markets at this time. In Russia, for instance, the crisis has created a sort of galvanizing effect. We've seen a whole stream of legislation or intended legislation come out in order to accentuate the value and facilitate issuance in the domestic capital markets. Markets develop at a very different pace. So we've got some where we have quite centralized government, quite reinvigorated government. For instance, in Russia, Putin put out a list of all the developments that he wanted to see in the markets over a very short time span with dates attached to them. And they've been running through this list very quickly. In Ukraine, on the other hand, where you have quite a lot of political turmoil, it's very difficult to see a consistent response from there. But I think in general, all these the devaluations that we've seen, volatility we've seen, the difficulty of accessing international finance really refocuses many of the regulators on trying to develop a domestic capital market. I think we're the only IFI that has a significant program of borrowing and lending in local currency. Certainly some do borrow and lend in markets, but we come quite often in domestic markets where the currency isn't convertible, and we're able to lend term through being in that market. And often in order to come, we're changing securities market legislation, we're changing different national bank regulations. But because we borrow and lend in local currency, we're really focused on the whole market infrastructure, not just giving a loan. When you're physically borrowing and lending in local currency, as EBRD does, and running liquidity pools, you're really checking on that the whole market infrastructure works. And that's, of course, very important if you want to develop capital markets, which is EBRD's stated intention.